But right now, let's go out to CPA, accounting professor, tax expert, Dan Geltrude. Dan, welcome.
Hey, Dr. Drew, how are you?
It's a privilege. So let me start with this one thing. They keep talking about this tax plan being for the rich. Isn't that a misplaced? Isn't it just false? Isn't it? It's for the corporations, and the rich people, particularly those living in California and New York, are going to be paying more, aren't they?
Most likely, yes, they will. You know, everyone's tax return is an individual case. So when you're talking in generalities, it's a little tough, but we can do that. So, yeah, if you're living in New York, you're living in California and some of the high tax states, and you're a high earner, you've got some problems.
So why are people getting by with calling this a tax for the rich? I mean, I understand it's rhetoric and politics, but is it just because the corporations do stand to benefit? And by the way, the corporation's the one creating the jobs that will benefit the rest of us, I hope. But why is this not a jobs bill? Why can't they get that across?
I think when they're talking about the rich, if you exclude the dramatic cuts that you have with corporations, just focusing in on the rich, look, top tax rate, 39.6%, that's coming down to 37%. So you got 2.6% drop there. So the logic is, well, those people make a lot of money, so that 2.5% is going to mean they're saving a lot of money. That's point one. And point two, death tax. Originally, that was supposed to go completely, and people were going crazy saying, oh, that's for Donald Trump. He's really going to make out billions of dollars passed on without paying tax. Well, you know what? The estate tax is back in. It's been doubled, the exemption, but it's back in. So I just don't see this as, the talking point of this is all built for the rich.
It's really that somewhere around 35 to 50% of people don't really pay taxes. It's built for the middle class, that 50 to 85% earner, is it not?
Yes, it is. Look, the top 10% of earners in this country pay 70% of the tax, and you have nearly half the people that pay no income tax. So you got this middle ground here, right? And I think that's where these tax cuts are meant, particularly people who are not itemizing. Why? Because they're getting a double their standard deduction, and the tax rates are lower. They have to save money. They have to.
And so this is going to go down now, I guess, now that Mr. Rubio has flipped on this. Is that accurate? Is there going to be a tax?
He's on board. He's on board.
And does that do it? That does it?
Well, there's going to be some changes announced in the next couple of hours, and we have to see if anybody flips because of that. But if they don't and everything stays the way it is, it looks like it's going to be a go.
And what was that issue? Is the family leave coverage or something? Was that correct?
It was the child tax credit. It was at $1,100, and my understanding is it's up to $1,400, so it's $300 increase. And my understanding is that has satisfied him. And, Dr. Drew, let me just bring up another point in terms of benefiting the middle class here. When you're talking about Main Street businesses, those are owned by pass-through entities. And we've already heard the talk about there's going to be tax cuts for these pass-through entities.
Well, explain to people what a pass-through entity is.
Sure. A pass-through entity is an LLC or an S corporation or a partnership or a sole proprietor. So it simply means whatever income those businesses have, the business itself does not pay tax. It passes through to the individual owner, and then that individual owner pays tax at their individual tax rates. Okay?
Right.
So now, if individual tax rates are going down, that means tax savings. On top of that, they've put provisions in where those pass-through type entities are going to get even more favorable tax treatment. And that's the people that we really need to help. These Main Street businesses need some tax relief. Why should they be treated any differently than, Walmart? They shouldn't be. They shouldn't be.
So this is the first. I've heard a lot of complaining from small business owners over the last 10 years. Although I've not heard any cheering yet from them. Is that yet to come? Do they not understand the benefits they're going to derive? Or here in California, is the state so onerous that all that's going to get sucked up by the state taxes anyway and the lack of a deduction?
Well, let's start at the beginning here. The reason you're not hearing a lot about it is because it's been up in the air. Nobody really knows where it's going. Looks like it's going to go through now. But more importantly, it's a little bit complicated. And that's the problem. So people are saying, well, wait a minute. I can't figure this out myself. I got to wait for my accountant or my tax preparer or my attorney or whoever to figure this out for me. So that's why I think people are a little hesitant. But what I'm saying, based upon what I've reviewed here, Dr. Drew, I think we're going to get tax relief for those Main Street businesses, and I think that's really critical for the economy and for the middle class.
I completely agree with you, if indeed that ends up being what happens. I'm wondering, what the thought bubble over my head was, every time they talk about simplifying the tax code, every time, it never happens. By the way, did they get rid of AMT, alternative minimal tax?
They raised the bar for individuals in terms of who falls into it, but the alternative minimum tax is still there.
Can you explain to people the history of that tax? My understanding, it ended up something that was never intended to be.
Right. So what happened was, going back about 50 years ago, what they found were there were high-income earners that were getting the benefit of really large deductions and therefore canceling out all their taxable income. So what the alternative minimum tax is, it is a separate calculation. It's a parallel calculation to your regular tax return. And what it does essentially is it says if you have taken too many deductions, certain types of deductions, we're going to disqualify those deductions so you pay a minimum tax based upon your income level. So it was made to make sure that you had people who were making a lot of money not
escape,
zero out their income.
Yeah.
Okay. Now here's what happens: over a 50-year period, they were never adjusting the scale to what those income rates were. So all of a sudden, you had middle class people, people making $150,000 or so on. Now they're family of four living in California. Those are not high income earners or living high on the hog, right?
Right.
And now they're falling into alternative minimum tax, which means they're paying a minimum tax that's much higher than it should be. And that's why it's really a crazy calculation.
I can't see why they don't get rid of that one. I don't know what it was who defended that. It's just such it of course follows on the heels of my question about why we can't simplify the tax code, right? They kind of go together, because the AMT, I can never figure that out, when that's going to kick in. My accountant can't figure out when it's going to kick in.
But because you don't know until the calculation is actually done.
But that's,
so it's really hard
the craziness. You can't even eyeball it. You just it's just coming.
Cannot.
Yeah.
You cannot. And the reason it never gets simplified is what we've been watching for the last couple months. It's all about making the sausage. Because now people are saying, well, if you want my vote, I want this. You want my vote, I want that. Now all of a sudden you can't get simplification because everybody has an exception.
We're talking to Dan Geltrude, attorney, CPA, accounting professor, tax expert. Where are you a professor?
Montclair State University in New Jersey.
And is there a website you'd like to refer people to?
Sure. It's Geltrude.com, Geltrude.com.
It sounds like generally you're a fan of this tax plan.
Overall, look, the tax reform and the tax code ends up picking winners and losers. It's just the nature of the beast.
It has to.
It has to. And there's I think more winners than losers here. There's aspects I don't like. I really don't like the SALT situation.
What is that?
Not allowing the deduction for state income taxes.
Oh yeah. Yeah.
I really think that that's inherently unfair. But other than that, for the most part, given the circumstance and the political atmosphere we're in, I really don't think it's too bad. Now, I know there's people who hate it, and probably, I'm going to get some hate mail on saying that, but it's just the nature of how tax reform works.
Who hates it? Who is it going to be bad? Who, other than people that live in New York and California because of our onerous state tax, as I've repeated, but who else hates it?
I think there are people who potentially hate it because they're listening to part of the media spin saying, hey, listen, big cuts for corporations, big cuts for rich people, and you didn't get that much. Your tax cut is not making a difference in your lifestyle. And I think those people, when they get stirred up, say, well, why is this person getting more than I did? And I don't think you could look at it. I think you have to look at it this way. If you're getting something, it was better than no tax reform at all.
Is there other groups like certain, commercial real estate, or somebody that really is unhappy with it because the way they do their business is going to be affected?
Well, it's interesting that you bring up real estate, right? Because if you look at, I'm in New Jersey, you're in California, when you look at our states and you start putting limitations on deductibility related to mortgage balances, when you start taking away real estate,
property tax deductions,
and you're not allowing potentially, we have to see what happens, potentially no mortgage deduction for second homes. So now, nice coastline in California, New Jersey has some beautiful beaches. People have second homes in those areas. Now, all of a sudden, you're going to see those property values coming down. You're going to see real estate moving a little bit slower in states like ours, I believe.
Are smart attorneys, CPAs like yourself, going to come up with little loopholes that these people are going to slip through?
Every time there's tax reform, those loopholes get closed more and more and more. There's still some out there, but, it's not written yet. So I hate to say it. Nobody really knows what's in this thing, including the people voting for it.
I'm looking at some of the negativity on the plan. It's just unbelievable, the rhetoric around it.
I think it's because people simply don't trust government. They're just not believing the story. It's much easier to believe the story to say this is a bad thing and they're lying to you. That's easy to absorb.
To sell. It's a good sell.
Yeah, it is a good sell. It's much harder to say, trust me, this is good for you.
It may not be good for them directly, but isn't really their primary objective? Shouldn't their primary objective be to stimulate the economy? Isn't that what's going to make all boats float when you get right down to it? Nothing else really matters except that?
Yeah, yes. And look, let's look at where the stock market is going. Let's look at how much wealth has been created with the thought, the expectation that we're going to get tax reform. I mean, people are doing really well in their 401ks and their investment. That's a great sign. That is the tide lifting all boats. That's why I look at it and say, if you really believe in trickle down or supply side,
well, nobody does though.
Right?
Most people sort of skeptical about that.
But they are, but listen, if you're buying it, what is the reason that we would be lowering the corporate taxes? It's because we trickle down effect, creating jobs.
You look at it and say jobs, number one, but again, at a time when robots are taking over jobs, it's like, all right, prove it to me. So I understand why people are skeptical of that. But number one. Number two, I really don't care how they stimulate the economy. Just I know how incredibly powerful our economy is. And if they could increase the growth rate 2% above where we are now, people will be stunned. About what they would have going on here. Don't you think?
Yes, and I think it's realistic. And that's also why I don't understand why people, or many people, are riled up about giving tax cuts to these pass-through entities to help that small business owner, or quite frankly, that they lowered the highest tax level from 39.6 to 37%, because you're trying to stimulate these people to spend some extra money. That's what makes it go round.
Right. I think people don't trust that. But again, you were talking about the weeds of the particulars. I'm just saying that we should be keeping our eye on that ball, and that the press taking, not even bringing that into the conversation, I think is reprehensible. If they really want to help this country, really want to help people, that's how we're going to do it. And why can't they at least put that as part of the narrative in the conversation?
Look, here's another way of looking at it. You could look at where we've been for approximately the past decade and say, do you want to leave it as is? Is the sluggish growth okay with you? Does that feel good? Or do we try something new and see if we can really step things up? And look, so far it's working. The economy is clearly picking up.
But I think though a lot of people are sort of okay with it, and the millennials are the one absorbing it, and they don't know that there's something better for them. You know what I'm saying? I think that's part of the narrative problem anyway.
Unfortunately, like us, who lived through the Reagan years and know what it's like to truly have a booming economy and that confidence in your country and its abilities, They don't know what that feels like.
No, they have no idea. But then again, neither did we in 1978. And and things were a lot worse then too, to be fair. So.
That's true. Well, listen, keep in mind too, we got this big debt looming over us.
Yeah.
And we did not get in that place, right, by taxing people too little. I say it over and over again, Dr. Drew, we have a spending problem. Yeah. And that's really what we need to address.
And we will leave it there. That is another conversation for another day.
It is.
Dan Geltrude, again, the website is geltrude.com. Is that right?
Yes, that's correct.
And of course, Mr. Geltrude is an attorney, a CPA, accounting professor at Montclair State in New Jersey. We hope to talk to you again soon, Dan.
Great. Thank you.
Take care. 800-222-5222 is our phone number. It's Midday Live. Dr. Drew, Mike Cathwood, Talk Radio, 790 KBC.